here joined by Mr. M.K. Dhanuka, who is the chairman of Dhanuka Agritech. Welcome, Mr. Dhanuka. Great to have you. Just wanted to have your view because good show when it comes to margins. Although your gross margin contracted due to higher raw material cost, what went right when it comes to EBITDA margin? What were the levers, and are these margins sustainable?
Yes, last year actually we have introduced three new molecules first time in India. They were Lenovo, Purge and Micro Super. So being no competition in the market, Dhanuka got good margin in these molecules, and we hope that we will be able to sustain these kind of margins in the current financial year also, because the volumes for these molecules will further rationalize in the current financial year.
That point. So you are saying this EBITDA margin of around 25%, this is sustainable, or this kind of EBITDA margin you will be seeing in FY26 as well?
No, it is not 25%. EBITDA margin is 20.47%, which are sustainable in the current financial year.
That point. Also, on the initial monsoon estimates, sir, which seems to be favorable, and given that your company's base has also reached to around 2,000 crore, what is the revenue growth that you are expecting when it comes to FY26?
We on the front good expectation of normal monsoon by SkyMet and the IMD forecast, because monsoon plays an important role in the agriculture and the agrochemical industry consumption. So we are confident that farmers will have, in anticipation of good yield, will sow maximum acreages, and we will be able to have a double-digit growth in the current financial year as far as the top line is concerned.
Okay, got that point. So can we see this 20%? If you can just quantify that number, sir, for us. Can we see the same growth, the 20% that you have seen in the Q4, or you can see 25 to 30% of growth when it comes to FY26?
No. For the whole year, the growth was 15% only. We cannot see the quarter-to-quarter growth because it's a seasonal industry. So we have to see the YoY, basically the results. So that's why the yearly growth was around 15%. So we expect similar growth in the current financial year also.
For that point. And sir, the revenue growth of 20% that you have seen in Q4, is there any kind of contribution from the Bayer product in terms of royalty that has helped to achieve this 20% growth?
Yeah, there was 12 crores royalty which we have received from Bayer in the fourth quarter. So that has been included in the top line. And in current financial year, with effect from 1st April, the Iprovalicarb product has been transferred to Dhanuka, and Dhanuka will be marketing this molecule in the current financial year in India. But in the other countries, the registration is under process of transfer. And once the registration is transferred, then the volume will start coming in the books of Dhanuka. But till that, Bayer will continue to sell the product for another 6 months, and royalty will be received by Dhanuka for 6 months in this financial year also.
Okay. And sir, in terms of volume and value growth, if you could bifurcate those things for us, how much was the value growth versus how much was the value growth in this year?
The last year volume was 3% higher overall for the year in comparison to the value, because the prices were declining. That was the major reason. And this year we see either flattish. There should not be any major difference between volume and value wise. However, since the prices are on the rise, we expect 1 to 2% higher value growth in comparison to the volume.
So 1 to 2% of higher value growth versus in comparison to volume growth. Got that point. Also, on the Dahej facility, so what is the current capacity utilization when it comes to your Dahej facility, and what is expected in FY26, and for EBITDA margin to become positive when it comes to Dahej facility, what is the capacity utilization that Dhanuka will need?
Presently, we are utilizing only 25 to 30% of the utilization of the capacity at the Dahej unit, since we have only one molecule in our portfolio, and that too we are selling only in domestic market. We have applied for the registration for exports in various countries. Once we will get the registration, then we will be in a position to export, and the volume will start increase, as well as we will be able to utilize more capacity. However, we are adding one molecule in the Dahej facility this year, because it's a multi-purpose plant, so we can manufacture other molecules also in the same plant. So that molecule, although very small this year, but from next year onwards, it will also contribute significantly. It will take another 2 years for the Dahej plant to become EBITDA positive.
2 more years for the Dahej plant to become EBITDA positive. Also, on the buyer's product, so how much revenue this segment or this buyer is expected to generate when it comes to FY26, and are the margins of these products in line with the Dhanuka's EBITDA margin? And also the third question is, what is the opportunity size when it comes to this portfolio?
You see, we are expecting similar EBITDA margin what the Dhanuka is getting, around 20% from buyers these two molecules, and we are expecting the Indian domestic market turnover in our books in this financial year, which is around 60 crores of rupees, while the half of the volume of the overseas will start coming in the books of Dhanuka if the registration are transferred to Dhanuka by buyer in the overseas 20 countries. So that way opportunity is big, because the Pro Valley Carb is used on grapes mainly, but other horticulture crops also. And in 20 countries, we hope we will be able to get the market in the next year.
Also, sir, just trying to understand this more deeply, how the international market is doing, given that in most of the cases, we have seen that international agri markets it's not doing so well. So just wanted to have your thought when it comes to international market, considering these two fungicides that you have acquired.
You see, earlier for 2 years, definitely the export was not doing well. But from current financial year, the exports have started doing well, and there is good demand is seen in the export segment, because one is China is not more competitive in comparison to in India. Earlier, a lot of exports were happening from China, but in US, because of imposition of tariffs, the China has become more costlier. So India is the preferred choice now after China for export, and we are now the second largest exporter of agrochemicals in the world. So we hope that in this financial year, the export demand will remain good.
So export demand is expected to remain good. Well, thank you so much, Mr. Dhanuka, for answering all the questions, and all the best for the business.
Thank you, Varsha ji.